Good morning from London. This is Bloomberg Markets Today. I'm Anna Edwards alongside Guy Johnson and Tom Mackenzie. With the cash trade just less than an hour away, here's what you need to know. US and European futures trade sideways as markets look ahead to data on America's producer prices. Fed Chair Jay Powell speaks later today. Anglo American tells BHP it needs to dig deeper as it rejects a second takeover approach from its rival. And French President Emmanuel Macron tells Bloomberg he's open to seeing a major French bank acquired by an EU rival to boost financial integration. He spoke exclusively to our editor-in-chief, John Micklethwaite.
This is a totally new world, and we do need this new business model for the Europeans. More innovation, more investment.
OK, let's check in on these markets. A big day in terms of the data, of course. We'll be unpacking that for you. European futures, though, currently edging lower, just by 1/10 of a percent. FTSE 100 here in the UK pointing low by 0.2%. 448 on your US benchmark 10-year. And euro-dollar at 107. The single currency currently unchanged. Markets Today starts right now.
Tuesday the 14th, good morning, welcome to the show everybody. It is a day in terms of the data of waiting, basically. We await the PPI data out of the United States, we await Powell in Amsterdam, we wait for the NFIB data to come through as well. As we wait, though, we have plenty of things that we can be discussing. Clearly, the GameStop story is back. We're going to be talking about that a little bit later on in the programme. But while we wait for all of the stuff to come out of America, we have plenty of stuff to talk about from our side of the Atlantic. We get data out of the UK in terms of what is happening with wages, which are holding up quite nicely. And we get news out of Anglo American. We've been waiting for the update in terms of the pushback to BHP, and the strategy that we are talking about here involves significant divestments.
Yes, it does. Lots of divestments. Let's just go through them. Anglo American Platinum to be demerged. They're planning lots of structural changes then. De Beers to be divested or demerged. Steelmaking coal to be divested. Exploring options for nickel. Amplats to be demerged. This is really fascinating because one of the reasons that they didn't want to accept the offer that BHP gave them, and this was the second offer that BHP gave, was because of all the preconditions around divesting lots of businesses, and it seemed as if the BHP offer wanted Anglo to take the risk, whereas BHP would just come in and then consolidate the whole business. But here we've got Anglo fighting back in a sense, creating shareholder, showing this is how we can create shareholder value, but doing a lot of the things that were required of it in that BHP offer.
I wonder how the South Africans are going to be reacting to this. This is a lot of the businesses that are being demerged are based in South Africa. How will the South African authorities feel about this? And what does BHP now do in terms of sweetening an offer? How does it make this work if this is the plan that's already on the table? Be interesting to hear what Elliott has to say as well on the back of this. They've been inserting themselves. Everybody's in Miami, apparently, for this big Bank of America conference that is taking place. All these guys are in the same place, which is going to be a fascinating cocktail. Yeah. I use the word cocktail advisedly.
Yes.
OK, well, it's a Tuesday.
It's Miami.
Early on Tuesday morning, it's Miami, so maybe reach for one. But this has been the narrative up until these lines are dropped, was that Anglo was very resistant to these structural changes because of the complexities. They've come through. They were forced, of course, compelled to speed up their review of the business because of this offer from BHP. This is what's come through. So really, really potential significant implications. De Beers, of course, the diamond part of this business, to be divested or demerged, as Anna, you were saying. BHP coming through with that premium on that increase in terms of the offer. And so far, this is a response from Anglo American. So this is a really consequential update in terms of this story. But one senses this is not the end of the story. And
just to think, we're going to link to UK jobs, so I want to mention a UK angle on this. UK listed, of course, Anglo American, to slow investment in Woodsmith and no Woodsmith capex in 2026. I think that's the fertiliser business in the UK. So that is something we'll continue to watch. But does this, the fact that they're going about this structural activity, does this invite another offer from BHP? Or is this enough for the likes of Elliott on a standalone basis? Will they say, OK, we don't need BHP because Anglo's got it in hand, it's doing this stuff itself?
And all of this, in some ways, is about copper as well. This is about the copper business. Look at what is happening with copper right now. The incentive to get this deal done is even greater as copper continues to rise, despite the fact that the Chinese are actually putting metal back onto the market. The price continues to rise, which tells you about the underlying reason, the kind of the jewel in the crown. All of the rest of this stuff can be shared, and yet there is still significant value potentially in this business as well, which I think is fascinating. Let's talk about this labour data out of the UK, because, again, also I think this is really interesting and I think poses a problem for the Bank of England.
Yes, so let's just go through some of the numbers. So average weekly earnings, because, of course, we're watching wage data as well as the unemployment data. The wages number, if you've got the bonuses included, you've gone up from 5.6 to 5.7%. If you take out the bonuses, you're actually static at 6% versus the prior period. But higher than expected.
But static is the important bit. Yes. This is a number that's been coming down really quite sharply
and it's historically high still at 6%.
But if we stabilise, if the rate of change, i.e. if wages hold up, we've had very high wages, the rate of growth has been enormous, it's come down slightly. If it now stabilises at this relatively high level, that is going to make getting back to targets slightly more difficult for the Bank of England. How many times can the Bank of England go if this data holds up?
And the number, again, 5.7% in terms of average weekly earnings. The survey, 5.5%. So you expected to see a softening from the previous month. You didn't got a tick up, to your point. And then in terms of the unemployment rate, 4.3%, that was in line. So that's where you met estimates, the unemployment rate, 4.3%. Obviously, relatively low level of unemployment still. The tie and the linkages between these higher wages and the services component of inflation is going to be interesting, isn't it? Because we know that services in the US and here in the UK has been stickier.
Yes.
If you have these still higher wages, how much of a floor does that put under the services part of the inflation mix, to your point, around the challenge for the BOE?
I mean, Bloomberg Economics, just in the inflation picture overall, expects inflation to be down at 2% very soon. So they are expecting, because of a lot of the things you mentioned the other day about, energy prices and things that we already know about. There is a bit of visibility there. And the pound doing a whole lot of nothing, I should point out, on these numbers. 125.60. Yeah.
The other thing that's probably worth folding in is that we have had an increase in April in the minimum wage, which some people will have front run. And as a result of which this may be complicating the data and certainly will complicate these numbers for the next few months. So it's going to be quite hard to read what is happening with wages as a result of that.
I saw a story the other day that made me think of you, Guy, because you like to talk about how this data, and many do, it's been incomplete and not as useful as it should be in terms of the unemployment rate in particular. And one of the issues, not just here but in the US as well, was getting Gen Zs to participate more in surveys. Apparently those born after 1997 not so keen to participate in some of these labour force surveys. And so what they've done, according to our reporting, is they provided increased monetary incentives. It's you just pay them.
Yeah, we didn't get paid for surveys.
Show them the cash.
Is that what's showing up in the wage data?
Yeah, maybe. The ONS is helping this problem, or not helping, as the case may be.
It looks like in the inflation data, just switching focus to Germany, because everything will touch the inflation data out of Germany as well, bang in line, essentially, with the estimates, and probably doesn't do much in terms of the changing the view that the ECB. This is the final read, 2.2% CPI year on year. That's for April, 2.2%. The survey was exactly that, month on month, an increase of 0.5%. Again, in line with the estimates. Probably doesn't do anything to change the view that June is the month for the ECB.
This is great. So we've got lots of things to talk about as we wait for PPI data to come out a little bit later on, and PPI and CPI tomorrow. And we've got the NFIB. Powell's in Amsterdam today, talking to Klaus Knott on stage. So I think that's at around 4 p.m. local time, 3 p.m. here in the UK. So actually, as we work our way through the afternoon, we've got lots to think about later on.
A lot of the action on the US economy has been here, hasn't it? In Europe. We've got, as you say, Jerome Powell here in Europe. We saw David Solomon from Goldman and others at that Paris Invest conference. And I know that the Goldman line was that the US economy, things feel good. So there is a lot of positivity around.
So actually, I thought the really interesting line came out of Brian Moynihan talking because they have a lot of data that they can use in terms of the credit card stuff that they are seeing. And he was saying, actually, he felt that the consumer was in really good shape, even relative to a few years ago when checks were being dished out left, right and centre. He feels that the consumer's in still quite good shape. And that's fascinating, because we're going to get retail sales data a little bit later on this week. And there's been this fear that higher inflation is effectively going to dampen that consumer spending trend. He's saying, actually, the consumer looks like it's in really good shape.
Account balances, he says, are looking pretty healthy, healthier than they were in 2019, and delinquencies are kind of at 2019 levels, which were seen back in 2019 as a relatively good credit picture in terms of the uptick. And he says that, in fact, has kind of stabilised. To your point, he's really painting a picture of a still of a still resilient US consumer a week when we get the retail sales.
And what's the impact of that very strong US consumer or resilient US consumer and strength in US data? What's the impact on that and Fed expectations? Because 2/3 of our guests, we have 3 guests for us to talk to during the programme about these macro themes, and 2 of them are expecting no cuts this year from the Fed.
I read the first one. I was like, OK, no cuts, fine. And then I read another one. No cuts. OK, right.
Something's building here.
Something. Yeah. But so has the pendulum swung too far? So that's the question, I think, going into this data set. You've seen yields come down quite a lot over the last kind of couple of weeks. Is there the danger we get a slightly hotter print and the market really reacts? Everything is so volatile right now. Everything's whipping around all over the place. We're getting corporate numbers that are sending big kind of tech stocks all over the place, 9, 10, 11% moves on a day. And then you come to GameStop. and
finally,
I knew you were crafting
stuff.
A nice link there.
At some point...
Your Roaring Kitty T-shirt somewhere.
Of course, yeah. Actually, I rewatched the Dumb Money trailer this morning just to kind of reacquaint myself with the vibe. So that narrative is back, which I think which again comes back to this kind of consumer story as well, which I find fascinating, that FOMO narrative is still exists.
John Orford says it won't be 2021 again. We won't have the same frenzy around the likes of GameStop and other cinema movie chains.
Kind of reining in Guy's enthusiasm.
I'm sorry, I hate to do it, but I mean, cheap money's not as cheap as it was, is the obvious point to make, I suppose. But also he was talking about the level of shorting that had been the case going into it in 2021. These stocks were 140% short. Yeah,
they went after Gabe Plotkin in a big way.
Right, exactly.
And he got burnt pretty badly, and so everybody's being much... I suspect the stops are more carefully managed this time.
And the shorts are less than 30%. They're 20, 24, 25% versus the 140.
And you'd be really careful with those shorts. You'd be covering them really quickly. And I suspect there was an element of that in there as well yesterday in terms of some of the managers are going to be going, we're at this again. I need to cover my shorts, I need to buy some stock, and therefore you probably get that building into the rally that we saw yesterday. But it's called, I think, overnight, it was still moving higher.
There we go. That was the move yesterday, wasn't it? And still gives us something to talk about. So thanks, Roaring Kitty, for that and your artwork. Let's move on.
Forward.
Let's move on. Yes, lean in. Let's move on to French politics or European politics and banks. So should we start with banks then? Lots of lines coming out from John Micklethwaite's interview with Emmanuel Macron, but bank consolidation, very laid back about it being cross-border.
How do you feel if you're a French banker this morning? If you're running BNP or Soc Gen this morning, I'm like, have you got my back? Have you not got my back? Kind of, how do I feel about it this morning? Because he certainly basically set up the French banks to be taken over.
And the point that John made to him in phrasing that question was BNP probably the most successful European bank, and in terms of market cap about 80 billion compared to what, half a trillion or something for its US counterparts. And in the way he phrased it, for example, and he switched focus to Soc Gen, in terms of banking consolidation, would you be comfortable with, for example, Santander coming and making a bid for Soc Gen? And Macron essentially said, yes, I'd be comfortable with that because it has to go either way. And we need that consolidation.
I suspect he secretly would be much happier if it's the other way around. He's kind of, you feel as if he's got to say this to keep the momentum behind his push.
He's a big fan. Banking union, capital markets union,
capital markets union, banking union.
Yeah.
The banking union bit is the bit that we're missing at the moment.
Yes.
And that really needs... If any of this is going to happen.
Yes, I mean, he said banking union is on track, but we still don't have joint deposit issuance. We don't have joint deposit issuance, which apparently is one of the big sticking points that Germany is holding up on.
Which track is that on? That's a very slow train.
And he was confident, though, that they would find common ground with Germany on capital markets union. But I thought it was interesting, whether joint issuance is any part of that CMU conversation is a real point of contention, because the Germans keep saying CMU doesn't mean we have to issue joint debt. And Lindner was out on the tape just yesterday saying that in the run-up to this conversation. So that's very much the view in Germany, and it seems that the French have a different view. Lots more common budget talk, trillions more, in fact, $1 trillion more, according to Emmanuel Macron, and we'll bring you more of that conversation a little bit later on in the programme. Here's what else we're looking out for today. 10 a.m. UK time, we get Germany's May ZEW survey, that important survey of German sentiment. We'll get at 11 a.m. Alibaba Q4 earnings. We've got a few really important Chinese businesses to watch out for today. 4 p.m. UK time, New York Fed household credit and debt reports, OPEC monthly report later, EU finance ministers meeting in Brussels, Qatar Economic Forum, of course, beginning in Doha. More on that shortly. And finally, central bank policymakers from the ECB, the BOE and the Fed will all be speaking at events throughout the day. And we talked about how Jerome Powell is going to be speaking in Europe.
Yep, looking forward to that conversation. I think it's going to be on Live Go, so make sure you tune into that a little bit later on. I would urge you as well maybe to keep an eye on what's happening with the NFIB survey. That's always an interesting insight into what is happening with the American economy. One thing that Anna mentioned that we should probably focus on a little bit more, the Qatar Economic Forum. Bloomberg is powering this event. It starts in Doha today. On the show, we're going to be hearing from the Qatari Prime Minister, Poland's President. Other highlights include the Malaysian Prime Minister, we've got the HSBC CEO, we've got the President and CEO, Franklin Templeton. It is a fantastic lineup. We're going to bring you the best of all of those great conversations. Up next, also, we're going to be talking about the big data. We've got PPI today, CPI tomorrow. We need to focus on what is happening with inflation and how the market is set up going into those key numbers. IB plus BBTV Go. It's a bit of a mouthful, but it's easy to use. Join the conversation. We'd be delighted to hear from you this morning. This is Bloomberg.
The level of debt in the United States, the level of spending is something that we need a sharper focus on and more dialogue around than what we've seen. We obviously had a pandemic. We made a bunch of decisions, in that pandemic, but we're long out of that pandemic, and the spending levels, are continuing at a pace that I think is raising our debt level and creating issues for us down the road.
Goldman Sachs CEO, of course, David Solomon, speaking exclusively to Bloomberg from the Palace of Versailles. Some earnings crossing from Hon Hai, of course, the contract equipment maker for Apple and others, but that is their biggest customer, of course, listed in Taiwan. It's a miss in terms of net income for the first quarter. Hon Hai, also known as Foxconn, missing in terms of net income in the first quarter. Net income coming in at 22 billion Taiwanese dollars. The estimates had been for 29 billion. So a pretty significant miss in terms of net income. Operating profit just coming in slightly above the estimates. Again, there could be a read across to Apple on the back of this miss when it comes to the net income from Hon Hai, the equipment maker, of course, making the vast majority of Apple's iPhones and iPads.
OK, we'll keep an eye on that as we get close to the US session. Let's pivot back to the macro themes, though. Marilyn Watson joins us, head of global fundamental fixed income strategy at BlackRock. Marilyn, very nice to have you with us. We were just listening to David Solomon from Goldman Sachs talking about elements of the US economy more broadly. We started the programme talking about, the continuing signs of exceptionalism, I suppose, around the US economic story, although arguably other areas turning a better corner. In terms of that US growth story, we've got a couple of guests coming up later on in the programme who both think that there won't be any cuts from the Fed as a result this year. But you do still see cuts ahead, do you?
We still think that there's a strong possibility that maybe cuts later on in the year. Obviously, we've seen incredible data really coming out of the US in terms of the labour market, economic activity. Everything is much stronger than the market certainly expected last year when the talk was around what kind of landing we would get. And I think it's proven itself to be very resilient. That being said, we are seeing signs of a gradual weakening or normalisation in the US economy, whether it's in the labour market. Inflation is also certainly having an impact, particularly on the lower income households and certain cyclical sectors. So we are seeing, I would say, a gradual normalisation. That being said, obviously, inflation is still, above the Fed's target. So CPI, I know, is the huge focus for this week. But, I think there's a lot more data to come. There's a lot of the year yet left to come. Yeah. And so we do think it's, still possible that the Fed may, eventually cut this year. OK,
and on that, the data that's still due, and we do get that inflation print, as you referenced, well, PPI today, but CPI crucially tomorrow.
Yes. Yeah.
And a lot of guests in the first quarter of the year were sort of dismissing the first quarter of higher than expected inflation prints and saying, well, that was the first quarter. We expect something much more moderated and things to moderate in the second quarter. So that puts some extra pressure, I suppose, on this data print, because this will be our first glimpse at Q2. What role will this data play, do you think?
I think it plays a key role, particularly, we had the FOMC last week, and they really tried to dampen down any expectations of a rate hike. So that's sort of come out of the market quite a lot. But I think the inflation data is now key because the Fed has made it crystal clear that it's very, very data dependent. It has a dual mandate of price stability and also growth, and particularly, obviously, focusing on the labour market. And so I think in terms of inflation, the Fed is very keenly focused on that right now. This week, we pretty much in line with consensus. We expect core and headline to come down a little bit. But, there are a lot of risks around that. The risks are potentially to the upside, particularly maybe in the services area. But I think now the data is really key, and I think the next several tranches of data that we get, which will also then obviously show what the PCE will be, what the Fed focuses on, I think is critical.
Consensus is an interesting word. The consensus is becoming more difficult to nail down, I think, at the moment. The market's becoming certainly more polarised in its view on what happens next. Anna was referencing kind of two guests think no cuts, some guests think we're still going to get 3 cuts maybe later on this year as the Fed goes quickly. What does that tell us about kind of where we are in the cycle? Because we've come a long way very quickly. The amplitude of some of the moves has been really quite enormous. How hard is it to be active in this market at the moment? How hard is it to have a clear view as to what is going to happen next?
Yeah, I mean, I think that's exactly right. We've seen some huge moves as we saw basically the economy calibrate from COVID and all the stimulus that we had then, amazing growth obviously coming out of COVID, and now it's much more finely calibrated. And I think now, in terms of investment, actually it's a great environment for fixed income. If you look at the yields, if you look at the carry with very little duration risk, I think it's a fantastic opportunity to actually put money to work and actually get the income that you're looking for.
So where do you take duration risk and where do you not take duration risk? Because it seems like in the States that the story is much more difficult to read. Is it easier to read elsewhere? Is it easier to take duration risk outside of the States than inside of the States?
In many ways, and in the US, there's no need to take the duration risk.
Yeah.
There's absolutely no need. You're not rewarded for it in the front end, very little duration. Makes sense anyway in terms of the value that you're getting, and you don't need the risk. If you're looking outside of the US, then I think in Europe, it seems to be quite a bit clearer. I think, we expect that the ECB will cut in June. They've signposted that pretty heavily. So it would be a big surprise if they don't. So I think in Europe, and then after that, I think it will again be more gradual because globally, data is actually generally better than was expected. But I think also taking duration risk elsewhere, we have an overweight position in the UK, for example, at the moment. We think that the Bank of England will certainly cut rates this year, potentially in the summer as well. So I think outside of the States, it's a little bit clearer. And it's just when you're looking at the States, I think it's just to say the data is now being so keenly watched and the economy is still running pretty hot. So I think the environment in the States of sort of looking at higher for longer, I think is still definitely persisting there.
Just what's your level of conviction around that overweight on UK gilts?
So we have a pretty decent conviction. I mean, we really think that the Bank of England is going to cut rates this summer, and they will continue to gradually cut rates as well. I mean, the UK is certainly not in the same position as the States when you look at the overall economy. We got the labour market data out, which is gradually, weakening a little bit. Also in terms of wages and other things. Inflation is coming down at quite a decent pace, as well. I mean, obviously the economy is doing better.
So the wage data, the unemployment data out today doesn't challenge that view?
No, it doesn't challenge our view that we think the economy is still, gradually weakening, and that we do expect the Bank of England to still, cut rates at some point this year. We saw, the last vote, we had a 7-2 split. 2 people were actually voting for a cut, and we think again now the axe is much more towards when will the Bank of England cut rather than will it cut at all.
OK, Marilyn, thank you very much indeed. Marilyn Watson, Head of Global Fundamental Fixed Income Strategy at BlackRock. Coming up, more from our exclusive interview with the French President Emmanuel Macron as he calls for greater financial integration within the European Union. That is next. This is Bloomberg.
We have to completely reset our model. I think now France clearly is one of the leading economies. We are number one in attractiveness. We've been number one during the past 5 years. And if you take job creation, growth, we are one or second in the Eurozone.
Do you think you're being held, back by the...
We are here. Now when I take Europe, and especially the EU as a whole, but it's true as well for UK, we have this issue in terms of business model. Why? Because we had low-cost energy thanks to Russia, production thanks to Central and Eastern European countries with quite low costs, a market for exports, China, and a geopolitical umbrella, US. These pillars are being completely revised, totally.
Yes.
And it's no more valid. So we have to reinvent. What and how? By creating much more value on our own, by being much more innovative, by creating much more jobs and jobs with value, good jobs, I would say, on our continent. The key point is deliver much more innovation and productivity policy, public and private. So the second key reforms is to accelerate decarbonization and especially our electricity policy, because through renewables and nuclear energy, we can deliver low carbon, sovereign, and low-cost energy, which is much more than importing gas and fossil fuels. Third, we need much more investment based on common budget, and my view, I mean, based on public reports and figures, we need 1 trillion more in terms of budget, in terms of spending. And in parallel, we have to make the capital market union a reality, which is not yet the case.
Can I come on the capital market union? Because you have here an example. You have BNP.
Yeah.
Now probably Europe's and definitely the Eurozone's most successful bank, worth $80 billion. But you are entertaining these people like JP Morgan and so on. JP Morgan is worth $550 billion. It's 9 times as big. Bank of America, 4 times as big. And the reason why is BNP Paribas cannot expand throughout the European Union and take over other banks.
This is very true. We have several
you
issues.
You would like to see BNP take over one of these, take over a German bank or an Italian one, if it was possible.
I mean, we do need a consolidation, but we do need as well an actual domestic market as Europeans, which is not the case. We have to deal with 27 regulations. You know, energy, finance, and telco are the key sectors where single market doesn't exist. It was a choice at the very beginning. I do agree that we have now to open this box and to deliver a single market approach. It's much more efficient. So our view is that now we want to elaborate a Franco-German consensus on capital market union to have a single system of resolution, a single supervision, and a much more integrated capital market union.
But would you be happy with, say, Spain's Santander coming and buying Societe Generale as part of that?
It's part of the market, but dealing as Europeans means that you need consolidation as Europeans.
So it could be cross-border mergers in both directions.
But this one is for banking union. It's already on track. Now we have to do it for capital market union, which is broader,
more difficult.
and even more difficult. But we started to do so at a political level during the last council, and I do believe that we can find a Franco-German agreement. But why? I want you to just understand the challenge for us. 75% of our financing as Europeans go through banks and insurance. So we need much more consolidation, but we need a clear circulation of the savings all around the place. This is the first objective, to be much more efficient and to be sure that our savings will be invested in the right sectors and the right geographies. Second, every year, 300 billion savings goes to finance the US economy because we are not attractive. So in parallel with this capital market union and this simplification, having an actual single market, we clearly need the same level playing field as the US in terms of financing, which means when you take solvency and Basel, as long as it's not implemented by the US competitors, it should not be implemented by the European competitors. Otherwise, this is a killer for risk-taking, because these regulations just prevent you, I mean, our banks, from investing in equity, which is exactly what we need. And if you take the key driver of this difference between the US and Europe, the key driver is the fact that the US economy innovated and invested much more in equity and innovation than the European economy.
The French President, Emmanuel Macron, speaking exclusively with Bloomberg's editor-in-chief, John Micklethwaite, at the Palace of Versailles yesterday. To carry on the conversation, think more about the implications of what the French President is talking about there. Anna Stupnitska, global macroeconomist at Fidelity International, joins us now. Anna, you were listening to what the French President had to say there. If Emmanuel Macron got what he wanted in terms of capital markets union, in terms of the banking union, how transformational would that be for bond markets in Europe? How transformational would it be for the European economy?
I think it would be extremely positive, very transformational, and I can't agree more with him in terms of the change in the model that the European economy needs. It is about productivity, it is about innovation, but also it's about finishing all those unions, banking union, capital markets union, the fiscal union, that remains still unfinished. And ultimately, to be able to transform the economy so much, the European Union needs to finance it. It's all about where are you going to get the money from to finance the defense and all the other ambitions that he's talking about. And I think that would ultimately have to result in joint borrowing, which is obviously a controversial issue right now.
If we do this, if Europe gets this right, how much lower would yields be? If we had multiple sources of financing, how much lower would yields be?
Well, it's really hard to say because obviously it depends on the composition of where this investment, where the financing is going, and what it means for growth, what it means for productivity. I don't know. It's really hard to say right now, but potentially it would be low from where we are today, because we do see quite a lot of risk premium now, given geopolitics, given the risky transition that Europe is going through.
What is the major headwind right now for the European economy that seems to be on a slightly surer footing, Anna?
Well, I think from a cyclical perspective, we are seeing signs of acceleration in the cycle, very moderate acceleration. Of course, we saw the surprise in Q1 GDP growth, and it was relatively broad-based. It's not just periphery, it's also core, except for Germany. And we expect this to continue through the year. But the main headwind is still that structural change that Europe is going through, and I think Germany is the best example. The energy shock, the changing model of China and that relationship with China, obviously with Europe being so dependent on Chinese demand, geopolitics, obviously the war in Ukraine. So I would say this is a structural headwind, and we are seeing that it is taking time for Germany to adapt. It might come out on the other side in a better place once this energy transition is complete. But for the time being, it is the main headwind.
OK, so the structural headwinds remain pretty significant for Germany and others within the Eurozone. To what extent would cuts from the ECB offset some of that pressure, do you think, Anna?
It will to some extent, because what we have learned over the past couple of years is that the transmission mechanism in Europe is actually quite strong and quite clean. It works pretty well, in contrast to the US. So as rates rose, we saw tightening in credit conditions. So the transmission worked through the credit channel and hit the real economy. And that's why we saw stagnation or recession in parts of the euro area last year. Now we are going to see the reverse. The ECB should be ready to cut rates in June. Of course, how many cuts they will do depends on the data and also on the Fed, because they can't get too much sort of policy divergence going on. But as they start cutting rates, that again should feed into the credit channel and should help the economy rebound. So we don't expect a huge rebound in growth, but something up to 1% for the whole of 24 is possible if the ECB manages to start cutting rates.
Anna, let me pivot to the US, because I know from reading your notes this morning that you don't expect to see any cuts in rates from the Fed in 2024. Give us briefly why you have that view, but what does that mean for stocks?
I think, first of all, I have to say that there is a lot of uncertainty in the data. We are coming out from this obviously very different period, and what we're seeing is that data is volatile. We continue to see surprises on the upside and downside. There is a lot of volatility. But from what we are seeing in the US inflation data so far, doesn't suggest that the Fed will be soon ready to cut rates and will have the confidence that inflation is moving to the 2% target. So as you know, there's a lot of debate about this, but looking at our own indicators and our own forecasts, we think that inflation will remain sticky and that disinflation will continue stalling in the coming months. So the Fed will not be ready to cut rates. So we are seeing that higher for longer scenario still play out in the markets, and concerns over inflation are not over yet, even though Powell tried to send a dovish signal and ruled out the possible cut. But we think that those narratives will be coming back in the market. And ultimately, the economy is too strong, the inflation is too sticky for the Fed to be able to cut this year.
So the US faces an economy that's too sticky to allow the Fed to cut, but you do think that the ECB cuts. And you think that they cut a few times this year, I think, and not too far into the future. So this sets up a divergence over quite a sustained period, Anna. What pain does that bring?
Yes, I think this is the major issue, and this is what we are already seeing, obviously, with the Fed repricing. Other central banks have to adjust their path. We're seeing the BHP and the huge pressure, and that's something that we'll probably see for other central banks too. And that's why the ECB could potentially cut 4 times, if not more this year, if the Fed also starts cutting. But because we don't expect any cut, they might well manage just 2 or 3 rate cuts this year. So yes, even though all the central banks say they don't depend on the Fed, obviously policy divergence manifests itself in currency differentials, and that will put quite a lot of strain, I think, in the market, and this divergence can go so far. That's why the ECB won't be able to cut as many times as they would ideally want to. And that also means that, again, this cyclical rebound is likely to be quite moderate because of that drag from the Fed that we are still seeing through the year.
Anna, thank you very much. Thanks for joining us. Anna Stupnicka, global macroeconomist at Fidelity International. We're back to that same theme about divergence, about whether these central banks can diverge. And clearly, if you ask them at the sort of theoretical level, then they always want to distance themselves from the idea that they're Fed dependent. But then you can't get away from the feedback. So, if the dollar remains strong, how does that feed then into your economy?
You've got Klaus Knott and Powell sitting on a stage today. It's going to be interesting to see the divergence maybe that exists there between Amsterdam and Washington. But the other factor I would throw in, and the UK is an example of this morning, is the wage data appears maybe more sticky than we're anticipating. Does that pour a little cold water on this idea that we're going to see significant rate cuts? I thought the idea at the beginning as well about kind of if we start to Emmanuel Macron's idea that we loosen up what happens in Europe and we get a capital markets union. That's going to be fascinating. The US relies on, this is partly why it's outperforming, is the US relies on bank loans, you've got the credit markets, you've got the private credit markets. The sources of available financing for US companies are just enormous compared with what we see over here in Europe.
And the €1 trillion additional budget that he was calling for as well. I mean, hypothetical, obviously, at this stage, and to what extent you get pushback from the likes of the Dutch and the Germans as well. But that brings to question the fiscal support that comes through from Europe in the years ahead as we continue to contend with the need to build out the defence space in Europe, and to what extent that remains supportive. Just going back to what Anna was saying, I guess, I mean, it is remarkable, isn't it? So potentially 4 cuts from the ECB, with that major caveat, if the Fed goes. Otherwise, you don't get that cover. So the global ramifications of this, and you only have to think about China. You could get an environment where the Fed doesn't cut, and then you have the suppressed nature of the ECB policymaking, and then things like China and the economy there not able to push through fiscal stimulus there because of concerns about the yuan, and all those drivers don't come to the fore. So that's the importance of where the Fed goes.
All interlinked. Coming up on the programme, diamonds apparently are not forever. Anglo American says it plans to exit its De Beers business as it seeks to fight off a takeover approach from rival BHP. We'll bring you all of the details next. This is Bloomberg.
Welcome back to Markets Today. Happy Tuesday. We are at about 11, 12 minutes away from the cash equities open. European futures pointing to gains of just 2 points so far in the session, but at record highs, of course. In the mining space, the focus is on Anglo American, planning one of the biggest shake-ups, of course, in its 107-year history. Anglo says it plans to exit diamond, platinum and coal mining as it seeks to fight off a takeover approach from rival BHP. Let's get more on this story and bring in Bloomberg's Martin Ricci with the details. Martin, what are the main takeaways then? It seems pretty dramatic coming through from Anglo American. What stood out to you in terms of their plans going forward?
Yeah, that's right, Tom. It is a major overhaul of this business that's actually more than a century old, as you said, in response to BHP's bid, which is now worth $43 billion for Anglo. Management of Anglo has come out this morning, less than an hour ago, saying they will sell their diamonds business, sell their platinum business, and sell their metallurgical coal business. Now, this is really breaking up the company so that Anglo can focus on what it thinks is its most valuable assets, which is copper, iron ore, and some fertilizer. It means that Anglo is going to be a very different company with or without the tie-up with BHP.
Yes, and so, Martin, how is this likely to be greeted by Anglo investors? Some of them have wanted Anglo to show, put pressure on Anglo to show, OK, you don't want the BHP offer, you don't like the strings attached to it, so show us how you're going to create value as a standalone. And this is a drastic proposal.
It does look pretty bold, and it does appear to answer directly some of the concerns that we've heard from Anglo shareholders, and also speaks to why BHP put forward its proposal. Look, Anglo's shares have underperformed versus the rest of the mining sector for a variety of reasons over recent years. It's a very complex company. It's got exposure to some very good assets in copper especially, and that's what attracted BHP. It does look as if Anglo's accepted that and said, hey, you know, this is right. We want to focus a little bit more on copper, and we want to keep that exposure, and we're going to listen to what perhaps some of our investors have said and what BHP is hinting at.
If you're a UK shareholder and you own Anglo, and you probably can't hold directly listed stocks in South Africa, are you going to be happy with this? How is this going to go down with the shareholder base at Anglo? Are they going to be happy to go and proceed with this? I appreciate that it crystallises value, but in crystallising value, it may cause some of these funds problems. Is this going to be universally welcomed?
It probably not going to be universally welcomed, no. Look, the South African businesses are a very complex matter for both BHP trying to take over Anglo. It said they will try and spin off or demerge those South African assets before any takeover. Anglo appears to be going a step in that direction as well by saying it will exit from diamonds, the famous De Beers business, and from platinum. So it's still very early days in this kind of titanic mining battle we have. We're waiting to see now what BHP does next. Will it up its bid to try and get Anglo to accept or not?
Yep. I imagine there's a lot of chat about this in Miami. Bank of America conference taking place there. Perfect place, you could argue, to debate all of this. Martin, thank you very much indeed. Martin Ricci on what's happening with the BHP Anglo story. Maybe it gets widened out. Let's talk about some of the other stocks we're watching this morning. Joe Easton, over to you.
Morning, guys. So Germany's buyer beating expectations today. A lot of this driven by the pharmaceutical division. They're seeing some strong numbers in some key drugs, including in oncology and kidney as well. So the adjusted EBITDA topping analyst forecasts on the main line there. We are seeing a little bit of weakness in the consumer health business. So this is the over-the-counter drugs like Rennie and also some aspirin products as well. But that is a much smaller part of the company, as we can see from this pie chart. We love a good pie chart. We can see consumer health is only 13% of the business, pharmaceutical 38%. Crop sciences, that's the big one. This is the business that's been weighed on by concerns around Monsanto and the Roundup weed killer, and worries that that did have negative health issues. And we can see that's been the big weight on Bayer stock over the past year, down around 45%, expected to pay out billions in compensation. But for now, some of these pharmaceutical earnings looking pretty good this morning. Then in terms of autos, we've got a big potential stock sale. This from Volkswagen looking to offload shares in Traton, the truck business, according to a Bloomberg exclusive. This is the business that it IPO'd around 5 years ago. As we can see, it is now trading significantly above the IPO price. It's had a bit of a rally recently, given some strength in some Latin American and also European markets, actually outperforming some of the key peers like Volvo and also the Mercedes truck business as well. They're a bit more exposed to North America. So this is a strong one. Potentially VW looking to sell some of that strength. There's the big ones on the screen there. Then finally, also looking at Vodafone today, a perennial underperformer, but today the earnings looking a bit stronger for VOD. They are saying the German business rebounding. There's a little bit of weakness here in the UK service revenue, but they are trying to offload some businesses, including in Spain, potentially meaning we might see some more buybacks adding to earlier this year. But look at that, 5 years down 45%. Most analysts are by those. Keep an eye on Vodafone this morning.
OK, lots to watch. Thanks so much, Joe. Our equities reporter, Joe Easton, with the latest on Stocks in Focus. We'll be back with the market open. We'll take you through what we get there. US futures are entirely flat this morning. We're waiting for the US inflation print tomorrow. European futures are flat. We'll be back with the market open and events in Qatar at the Qatar Economic Forum. This is Bloomberg.
Tuesday the 14th, good morning. Welcome back to the programme. We're a couple of minutes away from equity trading here in Europe. There are actually a lot of single stock stories that are worth thinking about. The macro overlay is that we're waiting for a lot of inflation data, which is going to come later out of the United States. We've got NFIB data as well. Powell's going to be speaking here in Europe a little bit later on as well. So there's a lot of kind of macro stories. But actually, in the moment, there's actually some really fascinating single stock stories this morning, and Anglo absolutely front and centre. As somebody joked earlier, diamonds are not forever. This is a massive spin-off. In some ways, you can argue if they get through this process, they'll be more attractive as a takeover because they'll have done the hard part themselves. But that could take a while, and is BHP prepared to wait?
Yeah, or does it, if they are prepared to do all this hard work, does it encourage BHP back with another offer?
Yep.
So there's a lot to talk about here. I know we're going to be talking to Will Kennedy, our colleague who covers this sector, of course, shortly. So that'll be good. Out of interest, I mean, copper prices are up 2% in Asia as well. So that...
Two-year high.
Two-year high, right.
Above that 10,000 level.
Underscoring the attractiveness of the Latin American, the South American business that BHP is interested in here, and the long-term story around copper has been well made.
The jewel in the crown is not diamonds. It's
nice.
copper.
Very nice.
And that's what they're going for. European futures then pointing to modest gains. It's worth reminding, tenth of a percent. It's worth reminding, we're 7 straight days of gains across European stocks.
Yep. Look at the FTSE 100. Look at the gains that have been made there. Absolutely sensational. The commodity stocks, to a certain extent, have been driving some of that move, but there's a real catch-up trade on with the UK right now.
It was autos at the top of the list yesterday, along with healthcare. We'll see if that's a trend that continues today. We're also watching the impact on the miners as well on softer iron ore prices, but it's really all about Anglo when it comes to that sector, of course. We are just 8 seconds away from the open, with European futures pointing to very modest gains. US futures currently flat. So let's check in on the markets then, and we'll start with the sector look as well, Guy and Anna.
Absolutely. Let's get an idea of what some of the single stocks are doing. Yesterday, I got caught out because Novo Nordisk was coming off a holiday, 2-day holiday in Denmark, so it had risen. But actually, in terms of the points, it continues to add today. I think it's going to the market with some debt as well. It's interesting that some of the French banks are actually... Soc Gen is up by 2.23%. Did Emmanuel Macron just paint a little target on Soc Gen's back, I wonder, in his interview with John Micklethwaite?
He was asked whether he would be comfortable with Santander, as an example, as a hypothetical, making a bid for Soc Gen in part of that conversation about banking union. So we're seeing a move there. Whether or not ties that to those comments can be interesting. 2.5% gain currently for Soc Gen. Just Eat, some of the delivery companies as well in focus. Delivery Hero selling part of its business in Asia, Taiwan, to Uber as well. So we watch those stocks. And then we got Bayer. Bayer coming in with some better than expected earnings. They face all this litigation risk, of course, but that stock in focus for us today, buy coming in with slightly better earnings print, Anna.
Yeah, in terms of the sector breakdown, we were pretty evenly split yesterday, and today not all that different. I was just looking at the worst performing sector is travel and leisure, but it's the leisure side, if you like, it's the gaming side. Flosser Entertainment seems to be weighing down on that sector rather than aviation, which is actually doing OK this morning.
IAG hit a 52-week high yesterday, which is interesting, that it is kind of pulling away from the rest of the pack here in Europe. That's the North Atlantic story,
US
and it continues to drive it higher. But utilities are up again. So this is the kind of the bond proxy trade, which a lot of people are talking about in terms of how you play Europe. You're looking at bond market outperformance relative to equities, maybe, seems to be some of the narrative that's emerging. And if you want to therefore play that narrative through the equities channel, do you play it through the utilities, which kind of fit more naturally into that kind of a trade?
Yeah, I mean, that was a sector that was being... Well, so that's utility space. You mentioned the banking sector earlier on as well, and that's in focus after that Emmanuel Macron interview that John Micklethwaite did. I was also looking at the energy names, given that he might have sounded relaxed and even encouraging about cross-border banking M&A, but not so relaxed about the idea that Total Energies might go looking for a higher value over in the US. But that sector is a sector that is gaining this morning, up by around 1/4 of 1%. Total Energies just up by 0.2% in that context.
Anglo barely moving on the back of this pretty seismic news that's come through in terms of the potential restructure there. Just up 0.2% so far in the session. BHP, of course, that continues to court this company, down 0.3%. So far, it seems investors kind of still adjusting to this news about a potential, obviously, major restructuring at Anglo, and they try to derive more value and push back against this takeover bid from BHP.
So go ahead.
No.
I was just thinking, looking at the points breakdown and what's moving on the points basis, and it's your old friend Guy, Novo Nordisk, to the upside. Only 0.7% higher, but obviously it's such a heavy weight that it provides the biggest points gain on the Stock 600 this morning.
So there's an investor call, there's a conference call that's just started. I think it's actually a media call, if I'm being more exact. CEO Duncan Wanblad, this is the CEO of Anglo, is on that call. We'll be taking questions. We'll be answering some of our questions that we've got this morning surrounding what is happening here. Let's dig further into what we're anticipating with our executive editor for energy and commodities, Will Kennedy, who's actually in Melbourne today. So the time zone still working in our favour. Will, your thoughts on what happens here next? In some ways, this clears the way for a takeover, because in some ways everybody's now on the same page in terms of what needs to be done with this business. How does the announcement this morning, which is clearly defensive in nature, change the narrative? They're basically saying at Anglo, we're going to do what they're going to do, but we want to keep the assets, the copper assets, in our own hands. How does that change the story from a BHP point of view?
Morning, Guy, or afternoon from Melbourne. Look, it's a very dramatic response by Anglo, as you've all been saying, and clearly it goes a lot further than some people had been expecting. But how does it change things? Well, look, if you're an Anglo shareholder, you clearly get more value out of this. You clearly are getting a lot of the things that people want, which is to concentrate on the copper, to make the group more streamlined, easier to understand, to get rid of some of the problematic businesses like platinum, but you get it without all the execution risk of a very big M&A deal. And those risks are antitrust, and we all expect that there may be issues in South America. The Chinese might want to get involved. South Africa may be more comfortable with Anglo doing this in South Africa than they would be a BHP forcing their hand. So there are attractions, presumably, for investors in having Anglo's existing management do this. It's a real statement of intent, and the ball is back now with BHP, who are going to have to think whether they want to come back a third time with a higher offer, which just is too compelling for shareholders. And that's what we will be watching over the 8 days or so until this deadline that BHP has on May the 22nd.
OK, so we have 8 days to watch for what happens next then in terms of a BHP response, Will. In the very short term, very little is happening to the share price. Anglo American, well, it was up by not even 0.1%. Now it's down by not even 0.1%. It's really not going anywhere in a hurry. What would you expect? Does that send us any kind of message, Will, or are we just all still waiting to see what BHP wants to do?
Look, I mean, I think, you know, clearly we're a little way off the offer price, I think. Definitely not a long way beyond it. which suggests that investors remain sceptical, A, whether BHP will come back, and B, whether they can get this deal done. This has always been a very complicated deal to get done for all the reasons we've been discussing over the last few weeks, principally the situation in South Africa. And I think that scepticism remains among many investors, and that's what the share price is telling you. Equally, there probably shows that investors are not willing to give Anglo full credit for this plan as yet, that they want to hear more about it. They want to believe that Anglo can get this done and get it done quickly. So I think investors are a little wary about most management teams right now, judging by the share price.
Will, just if we step back and look at the broader implications for the sector on the back of how this story transpires, how do you see if this deal goes through? Does it spur further acquisitions within the space, or does those acquisitions happen anyway, independent of the fortunes of Anglo and BHP?
Look, I think one thing that you can take from Anglo's reaction to what's happened to their announcement today, which is more dramatic than some of us may have predicted, is that no matter how this pans out in the end, that the mining industry will change because of BHP's approach of Anglo, that the mining industry in a year, in 2 years, is not going to look like it looks like today, that you're going to have a radically reformed Anglo American. And I also think that, you know, deals are back in the air in this industry. Clearly, people are thinking about how to change their mining portfolios to become more ready for the future. And I think for a lot of companies, that means principally, as we've been discussing, more copper and less reliance on iron ore and coal. And you're seeing that process play out. Exactly where the pieces fall remains to be cleared, but remains to be seen. But Rio Tinto, the one big company that we haven't talked much about yet, will have to look at its strategy and think about where it can add copper. And if investors decide to stick with Anglo's management team and their ideas, then BHP will have to think out where it's going to get more copper. So yes, I think we're at the start of a very interesting time in the mining industry, and the next 2 years will be full of stories.
Well, thank you very much indeed for joining us from Melbourne. Our executive editor for commodities, Will Kennedy. Amplats is down pretty sharply in South African trading. That's probably worth noting as well. There is a call that is underway currently with the Anglo management team. They'll be answering questions. So we're going to get more headlines and more detail on this plan that has been put out this morning. The other thing I want to flag is that the QEF, the Qatar Economic Forum, is now underway. The Qatari Prime Minister is now delivering opening remarks. If you want to follow this, you can do so, of course, on your Bloomberg terminal. We will be back there shortly as this event kicks off. But let's get back to the single stock story that we're watching here so carefully this morning. This is what the sensational six look like this morning, the core six, as we probably should call them here in Europe. The stocks that you want to be watching out for to give you an idea of what is happening, just to kind of flag the story. It's interesting that luxury stocks, Ferrari down this morning, LVMH a little softer this morning, and Nestle down. But Novo Nordisk continues to power higher, which is fascinating. It's had a very strong session yesterday. It's building on that today. What else are we watching? Let's go to the delivery business and see what's happening. Joe Easton, what do you got?
So we are starting with deals then, and it is delivery. As you say, we were looking at mining in terms of Anglo, but the big mover is delivery here, up 19% in Germany on news that they're going to be selling their Taiwan business to Uber. Uber moving further into Asia with their Uber Eats business. They have been trying to offload that unit for a number of years, and they are finally doing it today. Though I was reading there is actually some concern around regulatory issues. Will that get approved? That was the take from Bloomberg Intelligence just breaking, but the market is loving that. We're up 19% at the moment for delivery hero. Then Tratton coming down. Bloomberg deals team saying that there might be a big share sale. €1 billion could be offloaded by Volkswagen. That's weighing on that one significantly today, down almost 2%. Anglo, you were discussing there with Will Kennedy, we're ticking up around 0.4%. We'll have to wait. Where does this go from here? Diamonds are not forever, as you've been saying with that potential asset sale. Then SocGen potentially reacting to these comments from Emmanuel Macron to the Bloomberg editor-in-chief. The trader I was talking to today said that SocGen would be the most likely sale target. Probably BNP would be a bit too big, as would Credit Ag as well. So that one seems to be getting a bit of boost on that interview there. Then in terms of some other earnings we've got today. There's Vodafone ticking higher. We have seen a rebound in Germany. The UK still looking weak. We didn't see another buyback. We got Flutter Entertainment down 2.5%. I'm told this is due to strong basketball results, meaning the punters are winning and Flutter is losing over in the US. I know absolutely nothing about that sport, but that doesn't sound good for them. So it's coming down almost 3% now. And then Greggs. We love looking at Greggs because it gives us an insight into what people are eating. It's chicken goujons, it's sliced pizza, all of those delicious lunch snacks. But why isn't it doing well? Well, that stock already trades at 20 times earnings, so that one is actually coming down, giving up some gains. We've also got Sonova. This is in the ear and eye care business as well, and that one gaining 6%. Most of that is in hearing aids. That one's over in Switzerland and it's up 6% today. We'll quickly look at some German earnings as well. We've got a bunch of them out. It is a busy day for them. Rheinmetall, look at that one, down 6%. This is the defence supplier, the biggest German defence supplier. A massive rally for that one, so giving up gains following earnings. And Nordics in wind energy, rebounding following some of those losses spurred by Donald Trump's comments yesterday. And a couple of others. TAG, this is in the real estate business, just ticking to unchanged at the moment. And Brenntag in chemicals. A couple of weak ones over in Germany today, perhaps indicating something about the economy over there. And speaking of that, we'll quickly look at those UK stocks as well, because we did get that economic data. Wages starting to come down, but still looking pretty strong. But we've already had the Bank of England last week, so at the moment we're not seeing a huge reaction in the banks, in the home builders. Pretty steady across those. Then a couple of morning calls to bring you EQT. This is an interesting one because JP Morgan reckons you should be buying one of the largest private equity listed companies. They go overweight on that one, potentially a rebound in M&A. That is what JP Morgan is saying. That should be good for EQT. And finally, DHL going the other way in Germany is Exane downgrades. This one, they are warning of a potential easing in some of the shipping demand for DHL, and that is a key indicator of the global economy. That one goes to neutral. 43 price targets, trading at 39, and that one's slipping on the DAX index.
Joe, thank you very much indeed. Joe Easton on some of the single stocks that we are covering for you this morning. I want to take you back to Doha. The Qatar Economic Forum is underway. Francine Lacroix in conversation with the Qatari Prime Minister. Let's take a listen. Fran introducing this panel. Let's go straight there. This is Bloomberg.
Well, it's been actually a very long process, and especially in the past few weeks, we have seen some momentum building, but unfortunately, things didn't move in the right direction. And right now, we are in a status of almost a stalemate. Of course, what happened with Rafah has set us backward a little bit. I think, you know, there are a lot who are not understanding the nature of this conflict and mediation, and there is a lot of misconception about it. Because if we will look at it, when there are two parties who want to agree on something, you need to agree on the baseline, first of all. And I believe that what we are seeing, there is a fundamental difference between the two parties. There is one party who wants to end the war and then talk about the hostages. There is another party who wants the hostages and who wants to continue the war. And as long as there is any commonality between those two things, it won't get us to a result. I believe it's very important for all of us right now to see what's happening with all this destruction that's happened in Gaza. Enough is enough. We need to stop the war. We need to focus on the future. What's the catastrophe in Gaza, actually, if you look at it, most of the reports saying that it will need 40 to 50 billion to rebuild it until 2040. So the amount of destruction, we didn't see much of it. Only what we see on screens probably will not represent more than 10-20% of what's really there happening. And of course, you know, adding to this the risks of the spillover of the war, and we have seen, you know, the region became a very turbulent region, whether it's on the Red Sea, in Lebanon, and this risk is just going to increase as long as the war is ongoing.
But, Prime Minister, more immediately, do you see any silver lining? And how does the current fighting completely stop?
Well, we believe that the best way for us, that's what we'll be calling for, that to reach an agreement where we recognize that the ceasefire is required now. We need to stop the killing. We need to stop this atrocities that's happening. And of course, to negotiate a deal for the hostages. I think that if those two elements aligned, we believe we can have a deal, in just in a matter of days. But as I mentioned to you, probably there is no clarity how to stop the war from the Israeli side. I don't think that they are considering this as an option. And there is also, unfortunately, like a stereotype, even when we are talking about a deal and potential leading to a potential ceasefire, a lot of politicians are, retracting us by their statements that they will remain there, they will continue the war. And there is no clarity on what Gaza will look like after this.
So there's not much hope there.
Well, I'm always hopeful, so I cannot say that there is no much hope. Of course, we will keep trying, we will keep pushing, but it's at the hands of the parties at the end of the day. Once they are willing, they will find us helping and facilitating and bridging the gaps.
Do you see Qatar as continuing having a role in these negotiations?
Well, we didn't stop. We had actually some challenges in the past few weeks. We did a reassessment of the attitude as well. I mean, also we didn't want to be used or abused as a mediator. And to make it very clear for everyone, our job is limited to our mediation role. That's what we will do. That's what we will continue to do. Of course, whenever we are needed, we are stepping up. We were needed in the last 2 weeks in helping in the negotiations, and I believe we made a very good progress in the last round.
Prime Minister, there has also been talk about Qatar asking Hamas leaders that reside in Doha to leave. What's your country's stance on this?
Well, there is actually, there are a lot of speculations about this. And basically, if we look at this specific issue, we need just, to understand the backgrounds. When Hamas started their presence here in Doha back in 2012, it was for a reason. It was to serve as a political office for them to create a communication channel between them, the Israelis, the Americans, everyone. And this channel proven to be effective. I mean, if you look at different conflicts from 2014 all the way until now, this office played a key role in it, including the hostage release that unfortunately a lot of politicians have forgotten. Around 109 hostages been released because of the mediation that's been facilitated and mediated by Qatar. And it was the only hostage release that happened throughout the war, not by the military action or not by pressuring or doing so. And we believe that as long as the war is ongoing and there is a need for the communication, there is nothing to be entertained in that area. Our view here in Qatar that we need to be, accessed for different parties to resolve conflicts. We are not parties of the conflict. Like our principles, our policies in support of the Palestinian people will never change. Our policy in having a two-state solution will never change, and nothing will compromise it. And as long as we are, having the capability to be helpful, we will do it. We did that between Afghanistan, between Taliban and the US. We did that between different parties in Lebanon, in Sudan, and others. And that's basically the core of our foreign policy. It's been built based on mediation, on trying to help in resolving conflicts between the party. there are countries or people might not like it, but we don't ask everyone to like it, just to understand it.
But Prime Minister, and you allude to this, there was wide regional consensus, right, behind the events that led actually to Hamas relocating to Doha, including the US. Do you see those dynamics changing?
We don't see any change. Right now, everyone is focused on the current mediation. Everyone is focused on how to get to a result to end the war and to get the hostages back.
So on the rebuilding, under what circumstances would Qatar contribute to the rebuilding of Gaza?
This is actually, it's still a premature question because no one is talking about the day after from our perspective in a realistic manner. There are multiple views you are hearing here and there. We believe in one Palestinian government that should be in charge of West Bank and Gaza. And this Palestinian government should be built on consensus between the Palestinians and to lead the transition of the country. Whether this will be allowed by the Israelis, and we have seen the statements by the Israeli government that they don't want the PA even to be there. And I think that if we will end the war in a state where the country is destroyed, no vision for it, no vision for the PA to go in, it will be very difficult not only for Qatar, but for the rest of the world to step in and to invest in unknown. That will remain a challenge. So we always encourage, and we are working together with our Arab partner, what we call it, the Committee of Six Arabs, and the US, in order to try to think about what's the best way to transition to the day after in a way that will not actually affect the Palestinian people, will not affect the Palestinian cause, and will not undermine the Palestinian Authority.
Prime Minister, can you touch on some of the investment plans actually for Qatar? Are there any regions or actually sectors that you find particularly exciting right now?
Well, we are very much, actually, our focus in terms of the sovereign wealth fund and the investment that we are investing internationally, it continues following the strategy of diversification, which is mainly we invest in everywhere in the world where there will be a high return. We ensure that the balance is struck within the portfolio. Of course, US has been, in the last few years, one of our main markets. Asia is an interesting market for us, and we have invested over there, but also we are exploring new opportunities, but also trying to expand to new emerging markets like Central Asian region and Africa as well. Our focus is, as sovereign wealth fund, it's for future generations. So we wanted to make sure that these investments are not high in risk, ensuring the stability of the jurisdiction where we are investing, and ensuring the sustainable income. On a local front, we just launched our National Development Strategy 3, which is, we see it as like the last mile toward achieving Vision 2030. And if you will think about it from perspective where Qatar, in the last 25 years, focusing on building energy infrastructure, then the hard infrastructure preparation for the World Cup, now is the moment to capitalize on all what's being built. And what's really at the center of this strategy, focusing on human capital and all the investment that we have done in education and the human capital that Qatar have right now, unleashing their potential, opening up opportunities for the private sector, government to step back from a lot of things and to just remain as a regulator, creating, there is a significant incentive schemes that will be created to encourage private sector and foreign direct investment, focusing on areas of manufacturing, logistics, RRC, and tourism, ICT, financial services. Of course, there are a couple of sectors which are prerequisite, which is the healthcare and the education, and we have already made very good progress in investing in the infrastructure. Of course, the healthcare has more potential to improve the economic side of the healthcare, which is basically research and development, and hopefully pharmaceutical industry in the future.
But we talk a lot about AI and semiconductors.
Yeah.
Is there anything of interest in that industry?
Well, actually, right now we went through a review for the last year. Where can we position ourselves? And we believe that AI world is a big world, and it will need a lot of investment to come in, whether it's on the infrastructure or on the application side. Now, our focus here in Qatar is how to become more complementing for other countries in the region as well, because there are ambitious plans also taking place in UAE, for example, in Saudi Arabia. And we are focused in some verticals where we have already created the national champions, and how to enhance those national champions and take them to the next level by using artificial intelligence. And of course, on the infrastructure side, there is already some infrastructure being built, and now we are moving on to expand it and to grant part of it for the research element. Of course, the education institutions are very important, so that's why there are AI programs started in different universities here in Qatar. And last but not least, that what I've just mentioned in the speech, the Arabic large language model, which is for the first time, this is something that we are just launching. It's called Fanar, where we will have a system that will be fed by the Arabic language and also the values and the Arabic culture, because we see there is a huge potential in the Arab market where application developer and others can come in and can use it for their development.
And Prime Minister, you mentioned Saudi Arabia. Have the Saudis, do they want Qatari investment for their Vision 2030? Have you provided any, or will you?
Well, we've been doing a lot of things collaboratively, actually. We have invested in a few opportunities over there in Saudi. And of course, the Saudi market is a big market, very important market for our businesses as well here. And we've seen there is an increased interest in Qatari companies to go there also and to do some businesses over there. And look, I think that when we look at ourselves here, we look at ourselves, Qatar, Saudi, UAE, others. But when the world is looking at us, they look at the GCC as one unit, and you will see someone who's coming and visiting Qatar. The next day he will be in Abu Dhabi. The third day he will be in Kuwait or in Riyadh. And the same thing, it's happening. So whatever any country will do, the other countries will have an indirect benefit to it. And I think that there is a huge potential. And right now we are very much connected in the connectivity between the countries. So this will also ease the trade and the business together.
Prime Minister, do you worry that economic uncertainty makes it more difficult to attract capital to the region and to Qatar? The various US, China, for example, difficulties.
Well, it's a challenge, but I believe for us in the region, it's an opportunity. I think that, there are a lot of, we see a lot of interest coming from the US, a lot of interest even coming from China. And I mean, as we are brokering peace, we hope brokering peace in the economy here.
The one thing that everyone's looking to is, of course, the US election. What kind of policies would you prefer? Is it easier to deal with a Republican president or a Democratic president?
Well, honestly, it doesn't make any difference. We have built a very long relationship with the institution over there, and despite the presidency, this is the US system. So we should expect one time a Republican and the other time a Democrat, and it's fine. I mean, the institutional relationship is the key, and it's the cornerstone for the relationship between our two countries.
In terms of the policies, do you expect, I mean, they're very different.
There are differences, but relates to the Middle East, we don't see much difference, honestly. And we have seen that we worked with President Trump during his administration, and there were like, approach for some regional issues where we have our point of view. We discuss it with them. They listen, they change sometimes, sometimes not. And we respect. And the other, with President Biden as well, we are working with them very closely. And I'm sure you have seen what's happened. In Afghanistan deal happened during Trump administration. Then President Biden, we did with him the evacuation and all the transition after this. We are doing together right now the ceasefire in Gaza, but also other areas. And I think we are working very well with everyone.
Prime Minister, we talked a lot about volatility and some of the challenges and some of the opportunities. What gives you the most hope for the next 12 months?
Well, actually, first of all, it's when you look at the pyramids of needs, you need security. And as long as this war is ongoing, regional security will be threatened. And we will have, it will be very much unpredictable. So that's why even Qatar now, currently the president of GCC, what the theme of this year, we were very much focused on getting all GCC partners to think about what is the best regional security framework that we can work together with in order to ensure the security and the stability of our region. What's really worrying me is, the escalation of the war, the continuation, plus the uncertainty of some of the politicians just to continue the war without having any direction where to go or what to do. And that will just put us at risk of, spilling over. But also, post the war, actually, even if the war stopped and there is no rescue plan for Gaza, I think the problem will be bigger. And in the medium term, we are very much worried after all these images to see like another wave of radicalization. So security is the key for us in the region. We need to preserve it as much as possible.
Prime Minister, thank you so much for your time today. Thank you.
Bloomberg's Francine Lacroix, of course, speaking with the Qatari Prime Minister, talking about the situation in Gaza, of course, at the start of that conversation, moving on to the investment opportunities in the region, and then back to Gaza at the close. War as a threat to regional security, and even after the war, even after it comes to an end, fears about regional security and trying to preserve that at all costs. We'll be back to the Qatar Economic Forum momentarily. A quick pause to check on what's happening in the European space on these markets. Perhaps we're pretty flat, not moving very far. We have been hearing from the CEO of Anglo American, whilst Francine was talking to the Qatari Prime Minister, saying that there's, and one of the things he's been saying is that any buyer of the new Anglo would have to pay an enormous price. So that's the M&A story that we're watching this morning. We've seen Anglo American fight back and come out with an announcement about all the assets that they are selling this morning. That's one of the big stories we're watching. We're just waiting to go back to the Qatar Economic Forum momentarily. But, guys, European equity markets waiting then for CPI.
Absolutely. We're waiting for that CPI data. We're going to get PPI data today. We get NFIB data today. We're going to hear from Powell in Amsterdam today. There's an awful lot happening in this afternoon's session. It feels like maybe markets just sitting on their hands a little bit, digesting the Anglo news, listening to the call, and maybe trying to get some takeaways exactly in terms of how that is going to progress. As Anna says, we need to return you, though, to the Qatar Economic Forum. Bloomberg's editor-in-chief, John Micklethwaite, is in conversation with Poland's president. Let's take a listen.
We have got a long historical experience with Russia.
Wielokrotnie byliśmy przez Rosję okupowani, my jako Polska.
On many occasions, we as Poland.
Przeżyliśmy bardzo trudne chwile w naszych dziejach.
Through very difficult moments in our history. We have lost many members of our families who are murdered by Russians under different circumstances. And today we know one thing, that Russian imperialism is reborn, and it is not really important what name this imperialism has at a given moment in history. If we're speaking about Tsar imperialism, Soviet imperialism, or Putin's imperialism, which is now, this is actually the same Russian imperialism, which has got the same features. It is greedy. It is a kind of colonial imperialism, to be frank. The thing is that they are not looking for countries far away to subjugate them, to conquer them, but they are subjugating countries in the neighborhood of Russia. By doing so, they are spreading their influence, and by doing so, they are building their sphere of exploitation of other states and nations. Today, they want to do it with Ukraine, but we know very well that if they managed to win in Ukraine, if they manage to accomplish their goals, they will keep on attacking. They will attack other countries. Perhaps these could be the Baltic states, perhaps this could be Finland, perhaps this could be Poland, or perhaps these could be other countries which used to be part of the Russian sphere of influence. Perhaps they will try to attack in the southern direction or in the eastern direction, but if they win, if the free world allows Putin, allows Russia to win this war, then we will have to deal with another Russian aggression.
Very powerful statement. I know that throughout this war, you have always been a passionate supporter of Ukraine, and Poland has also given a lot of equipment, more than most other countries. But Romania has now just said it would send Patriot systems to Ukraine, and I wonder, is Poland ready to follow suit and send Patriot systems as well?
Yes, it is true. Right from the beginning of the war, we have been helping Ukraine in a very significant way. And I want to say it in a very firm way. It tends to be forgotten sometimes. We were the very first country which sent a lot of armaments to Ukraine. We were the ones who sent our main battle tanks. In total, we have donated to the Ukrainians more than 300 main battle tanks from the stocks of our armed forces. We have donated to Ukraine the equipment of the value of $4 billion from the stocks of our armed forces, and we keep supporting Ukraine militarily all the time. But please bear in mind that we are the ones who are potentially in this zone of risk, of threat. And that is why we are modernizing our armed forces to a huge extent. Right now, we are spending more than 4% of our GDP on defense in Poland. This is totally accepted and approved of by the Polish people. We need to stress that. We are a democratic state. We have got elections where the authorities are elected. And of course, the issue of spending, this is the burden on the taxpayers, and this is always a very important issue. But right now, nobody is disputing that in Poland. Everybody understands that we have to spend a lot of money to modernize our armed forces, and this is what we are doing right now. Indeed, we are buying modern defense systems in the United States, also in South Korea. And in this way, we are also adding new equipment to our stocks. We need to modernize as soon as possible. First of all, what we have to do is to replenish our stocks, also filling up for what we donated to Ukraine, because we have donated that equipment from our soldiers, from the stocks of our soldiers. Today, we are purchasing new equipment for them precisely so that they have means and way to defend Poland if aggression happens. But let me stress once again, we keep supporting Ukraine all the time. And first and foremost, we keep lobbying all over the world, across all our allies. We are lobbying to support Ukraine because we believe that this is of key importance right now in terms of survival for Ukraine when it comes to not allowing Russia to win the war.
Patriot systems, yes or no? That was the question.
Right now, we are only getting the first elements of missile defense system, Patriot, which we have ordered in the United States. We ordered that equipment 7 years ago. Right now, the first elements of this system are coming to Poland. So it's difficult to say right now that we could be providing Patriot systems to Ukraine because, as a matter of fact, we still do not have this system in Poland. We do not have it fully complete to provide for our own defense because right now we are only in the process of building our air defense system. It's going to be a three-layered system, starting from the Patriot system through a medium-range system to low-range system.
You put forward a very passionate argument for how dangerous Russian imperialism is, and you also expressed all the different reasons why we need to stop Putin in this. But going back to that question at the beginning, at the moment, that shows no sign of Russia retreating. It seems to be taking more territory. Do you worry that America has acted too late?
I am very calm, and I need to stress very firmly. America right now is giving the biggest support to Ukraine. And this American support to defend Ukraine is of absolutely key importance. Without that support, probably Ukraine would not be able to defend itself from Russian aggression at all. And Ukraine is defending itself. So let me stress, we were the first ones, indeed, who donated tanks, and we offered Ukraine to also supply fighter jets, MiG-29s, which Ukrainian pilots were able to operate right away. This is what we did. We donated MiG-29 jets to Ukraine. But indeed, the help from the United States, from the biggest military power in the world, is the biggest to Ukraine and the most significant. Let me stress very strongly. I am grateful to the United States of America, to U.S. authorities. I am grateful to the U.S. Congress, both to the Senate and to the House for taking the decision. I'm also grateful to President Joe Biden for taking the decision to give to Ukraine huge funds for defense. That decision was recently taken, and in the last 2 months, I also had conversations in the United States about that. I talked, among others, to Speaker of the House, Mike Johnson. I talked to him in March. That was when I was invited by President Joe Biden. I also visited the Congress, where I met with representatives of the Senate. I also met representatives of the House of Representatives, precisely with Speaker Mike Johnson. We talked about that, and I'm very much satisfied, and I'm very grateful to the U.S. authorities that they made decision to support Ukraine, because Russian offensive is approaching. The fact that it will happen is absolutely certain, actually. It is all about climate in our region, in our part of the world. Probably within the next few weeks, we can expect that offensive to happen when only the ground is dry and when it stops being that muddy, because spring actually makes it impossible for heavy equipment to move on the ground in Ukraine. So when only it gets drier, probably Russian offensive will start. And I believe that the Ukrainian armed forces, that the defenders of Ukraine will have received that support by then. This support is coming right now in Ukraine, to Ukraine, and we are seeing that in Poland, because we are the state which is the transit route to Ukraine, and actually all the assistance to Ukraine goes through Poland. And also this is the way we are supporting the defenders of Ukraine, by making available our infrastructure, our roads and our airports, our seaports. We are making them available for the support to Ukraine to be transported, and this is happening. This support is going right now.
That sounds to me like better late than never. But when you also talked about meeting American officials, Donald Trump, you also saw, and the interesting question is, what will he do about Ukraine? There is a theory out there, held by many people, that Vladimir Putin is hanging on until Donald Trump comes in. Again, to quote Viktor Orban, who sat here last year, he said that Trump won't
Chief
give
John
a
Micklethwaite
penny.
in conversation with Andrzej Duda, the President of Poland, and you can continue watching that conversation on Live Go on your Bloomberg. We will be back with more in the next couple of minutes. Stay with us. This is Bloomberg.
48 minutes past the hour. Welcome back. You are watching Markets Today. I want to draw your attention once again to the conversation that our editor-in-chief, John Micklethwaite, is having with the Polish President Duda right now at the Qatar Economic Forum. If you'd like to continue to watch that conversation, listen to that conversation, you can, of course, do so on your Bloomberg terminal. All of these fantastic conversations that are coming out of the event are on Live Go. So if you want to follow on, very easy to do so. However, let us turn our attention now to what is happening a little bit later on in the United States and tomorrow in the United States as well. We're going to see a series of inflation prints coming through. We've also got the NFIB data going to be coming towards us as well. Plus, we are going to see Jerome Powell speaking in Amsterdam a little bit later on. Giulio Ricci, Vanguard's head of asset allocation for Europe, joins us now to discuss all of this and the setup. As I think about Europe, the ECB, the Bank of England, and what they are going to do next, how important is what we're about to see out of the United States in determining how many times the Bank of England can cut this year, how many times the ECB can go as well?
I think it's going to be crucial indeed. I mean, there is now policy diversion in terms of monetary policy, right? Like, for instance, the ECB was behind the cycle in monetary policy. Now they definitely look ahead, or at least from our perspective. What I mean by that is that we do not foresee the Fed cutting this year over the course of 2024. So we think it's going to stay, the Fed will stay within the 5.25, 5.5 range. And that, of course, creates some challenges, I think, also for the Bank of England and the ECB in cutting more than what maybe the numbers would allow them to do. So our base case right now is for the ECB to have 3 cuts starting in June over the course of 2024. 1 month ago, if you did ask me the same question, I would have said maybe 4 cuts was in the plan. Now, because of policy divergence, I think they're going to be a little bit more conservative.
How much of it's down to policy divergence and how much is down to the data that are actually starting to improve in Europe as well?
Absolutely. I think it's both. The data indeed help the ECB in making those cuts in terms also in economic resiliency. So we're forecasting overall decent growth in real terms for the euro area by the end of the year, around 0.8, so slightly above the consensus. And of course, they don't have the sticky inflation in services and shelter, which is like the big elephant in the room, in my opinion, in the US. So the data, of course, act in favor of ECB to cut and Bank of England as well. But there is also an element of them not diverging too much. So, for instance, if the Fed was cutting once or twice, I think that would allow the ECB to do more this year. But in reverse, since we do not really see that policy panning out for the Fed, we think that the ECB will be a little bit more conservative in sticking to 3 cuts.
And how much stronger can the dollar get then, Giulio, in that scenario? I noticed this morning a note from HSBC, or some commentary from HSBC, saying there are limits to how much the dollar bubble, as they call it, may expand. What's your thinking?
I mean, there are for sure limits, but I think there is still room for the...
We're not there yet.
We're not there yet, exactly. I think there's still rumors for, margin for the dollar to go up. That, of course, position in a multi-asset situation, that position on investors in the UK or in Europe to benefit from that with exposure to US stocks. So technically speaking, we're a little bit more positive on US equities at the moment, precisely because of that FX component. So, yeah, absolutely. There is still rumor, in my opinion. There is a limit in terms of fair value over the longer term and strategically speaking. But, yeah, I don't think we're quite there yet.
So the upsides of a stronger economy for stock investors offset the downside of not getting those Fed cuts then, when it comes to your strategy for US stocks? Because you could argue if you're not going to get Fed cuts, then the markets are going to be disappointed. But you think if it's no cuts for the right reason, strong growth, then that satisfies stock investors?
Absolutely, exactly. That's what I think. So even though you're not going to see those cuts that might help US equities to be boosted in terms of discount rate, the economy looks still resilient enough, and the numbers are... Yeah, there is some softening on the job market data, but the economy still looks strong enough in order to sustain through the earnings and to sustain through the expectations, still a decent rally on US equities at the moment.
On the European story, we reflect on the fact we have 7 straight days of gains, grinding out these record highs for European stocks in an environment where you're expecting maybe 3 cuts from the ECB. Where do you want to sit within European equities? Does it look a little stretched at this point? Has it got further to run? You've got that preference for US, but if you have exposure to Europe, where does that lead you?
Yeah, absolutely. So let me clarify that. Strategically speaking, and we have been positioned that way for some time, we do see value in European stocks over the longer term, just because of valuations. So by no means I think that European stocks valuations are stretched at the moment. Let's face it, they were starting very low, so they looked very attractive. They looked very cheap for a long time.
At an index level, this has further to run.
Exactly. I think there is that rationale in a strategic basis. More on a tactical, say it's more like at the margin from my perspective. So we looked at U.S. stocks a little bit less favorably like 3 months ago. Now I think there is still more rand there. But generally speaking, Europe, a more balanced approach towards European stocks in terms of strategic allocation, that's what makes sense for us at the moment, absolutely.
And where do you go in terms of getting gains, yields, I should say, fixed income? Do you want to be at the short end, front end? Do you have a preference for Europe, the US? Is there a cap that's in place in terms of the US, in terms of the issuance that comes through for the long end? Where are you honing in when it comes to fixed income?
Absolutely. So from a multi-asset standpoint, because here the things are a little bit different whether you're strictly speaking a fixed income portfolio manager but a multi-asset level, we're positioned in a way that's what I call the Schrodinger's cat strategy, so to speak, which is on the US front, since we're really not expecting any cat, we're not really positive on long duration, so we're more on the low end of the curve, not fully in cash, precisely in order to allow for both scenarios to happen, one of the two. So not having the cuts, but equally, if something goes wrong, so to speak, and we do see those cuts, maybe because the economic data are not as strong as we would expect, I would be positioned more on the 2-year end of the curve to have some of that duration, depending there on the US yield curve, and also allowing to have some margin in order to take credit exposure through income, simply because I'm not really seeing like credit spreads to go much wider at the moment because of, again, of the positive outlook that we have on the US economy.
Given that positive outlook, is it okay as a credit investor that I look at it as a yield story rather than a credit story? When do I need to start thinking about credit as a credit story? When do I need to start worrying about that side of the equation? Because at the moment, it doesn't seem as if investors are really concerned about that side of the fence.
I think that's fair. I mean, on the credit side, we are still like on IG, investment grade positioning, in order to recoup that, because the yield curve is still inverted. So in order to recoup that income stream, I think it makes sense to have some credit in IG at the moment on the low end of the curve to gain that, simply because you can afford it. Again, as I'm saying, I don't think that there's going to be like massive widening of spreads in the US at the moment. So we don't really we see that more as a tail risk, not our base case.
OK, thank you so much. Thanks, Giulio, for joining us. Giulio Ricci, Vanguard's head of asset allocation for Europe. We are, of course, as you've been made aware and you've experienced through this programme, we are live at the Qatar Economic Forum, powered by Bloomberg. It has started in Doha today. It kicked off around an hour ago, and we brought you some great conversations from there already. We've heard from the Qatari Prime Minister, as well as Poland's President, who is still in conversation with our editor-in-chief. You can watch that on the terminal. Other highlights of the day include the Malaysian Prime Minister, the HSBC CEO and the President and CEO of Franklin Templeton. So plenty of good conversations coming to us from Qatar. Well, we're nearly done, guys, for this hour of the programme. European stocks not delivering much in the way of movement, but, yeah, it's all about that macro data, I suppose.
I like the way you stress delivering, because Delivery Hero...
There we are, they're delivering.
...is top of your list. They're delivering. So they sold one of their businesses in Taiwan to Uber.
Delivered.
They've firmly delivered, and investors are rewarding them. Up 18%. It's the biggest gainer across your major stocks in Europe so far.
It's interesting listening to the Polish Prime Minister thinking about how he is spending his money right now. Rheinmetall under a little bit of pressure, but the order book absolutely chock full right now in terms of what they are expecting to come from European governments in terms of
4% spending from Poland.
Yeah. The numbers are going to get bigger, and maybe they get bigger. That wraps things up. The Pulse is up next. The coverage will continue. This is Bloomberg.